Meantime, I want to shift our focus back over to the market because we are seeing the Dow and the S&P here take a bit of a breather today. Perhaps as we continue to learn more about that $1.9 trillion package and where it could go. Joining us now for more on that is our first market guest today, Will Rhind, Granite Shares CEO, joins us right now. And Will, when we look at it, obviously we're learning a bit more about how big the package is going to be, perhaps bigger than some people expected as Democrats continue to push through reconciliation. What do you make of what the market's saying about what we could get here in short order?
I think it's less about the stimulus, today. I think it's more about taking a bit of a breather, as you said, from some of the hotter sectors over the last few weeks, and we've seen, big interest or resurgence in sectors like financials and sectors like energy that have been very much out of favor, out of love over the last 12 months. And so those are cooling off a little bit today, but the big mega tech names still doing well. And that's why you've got a NASDAQ up today and indeed at an intraday all-time high again.
And so as you look to your portfolio right now, how are you making some adjustments on the expectation of more money to come here? You've talked about the exit out of the dollar largely because the expectation of additional stimulus.
Yeah, I think the big thing for our business in particular is this rotation back into commodities in anticipation of higher inflation. And really, this has been, I think, the big story of the last sort of couple of months at least. But I think going forward, this idea of reflation, what the Federal Reserve policies have really done is incentivize people to buy equities or buy the stock market. We understand that, but the question is, what do people buy in addition to that? And how do they prepare themselves for an environment that we could have materially higher inflation? So commodities have been a big focus for that. Oil price has gone up to over about $60 a barrel, which seemed unheard of just 12 months ago. And so we're back in a position where I think that commodity markets will improve, and we could be at the beginning of the next super cycle for commodities.
Yeah, we've been seeing that play out, and I'd be curious to kind of get your take on what we've been seeing play on the gold front too, considering it's still down year to date, but seeing a little bit of a pop here, I guess, as of late. Would you kind of pair those two moves and say that it's two stories of the same tale here, or is it more maybe tying it back to your earlier point there, a weakening dollar, and what that could mean for commodities here the rest of the year?
Yeah, the point, I think, is that right now they're moving in lockstep. So before, gold was acting much more as a counter-cyclical play, an alternative currency, if you will. And that was in an environment where we still had a lot of uncertainty about the effects of the pandemic and certainly pre-news of any vaccine. But obviously, since the vaccine announcement and people started to feel a lot more positive about the economy more broadly and a comeback, we've seen the pro-cyclical commodities, the energies, the industrial metals start to move as well. So at this stage, I still think that everybody should hold a bit of gold in their portfolio because it is an antidote to the dollar. It is something I think will continue to be positive in an environment where we have low interest rates and we have a lot of stimulus in the economy and a weaker dollar. But I think the positive thing for people looking at alternative stocks and bonds is that the other commodities within the complex are also starting to move higher.
And so while you're focused on gold right now, the other metal that you said that investors should be looking at is platinum. Specifically, you said that's likely to be the next Reddit metal. Walk me through your thesis on that front.
Well, I don't know if it's likely to be the next Reddit metal, but I think the point I was trying to make was that if they were looking for a metal to really influence, they should look for smaller markets rather than bigger markets. And something like silver, I think a lot of people misunderstand, is actually a huge market. And so it was very difficult, or would be very difficult for anybody to influence the price of silver. But platinum is a metal, I think, that has been undervalued for some time, used to trade at a premium to gold. Hence platinum, the word platinum in the English language became synonymous with meaning above gold. But obviously that hasn't happened for quite some time now, and platinum is trading at a large discount to the gold price. And so in this environment where commodities are starting to pick up again, we've seen really renewed interest in platinum. The price has rallied really quite spectacularly since the depths of the pandemic. And one of the main reasons for that is people are really positive about its use as a future metal or a metal in future technologies, particularly in hydrogen fuel cells. And so with this scramble for green energy, clean energy, we think platinum could be the new lithium in terms of that particular story. And so people will need, or they need platinum for hydrogen fuel cells and green hydrogen. And that, I think, is going to be a key part of the story going forward.
It would also seem to differentiate itself from, some of the other commodities we're talking about here, particularly gold, in how it breaks from Bitcoin. Those out there that would say it's the new digital gold. Obviously, the Tesla move here, interesting to see them adding 1.5 billion into Bitcoin. I'd be curious to get your take on what that means for some of these commodities, particularly gold, if it might lose some of the attention there as we're seeing maybe more companies think about adding it to balance sheets. What do you think that does to the overall cases for gold, perhaps losing a step here with Bitcoin?
Yeah, potentially. I think what's got lost in all the noise for Tesla is that what Tesla said in their filing was that, yes, they've bought $1.5 billion worth of Bitcoin, and that obviously rightly captured all the headlines. But kind of lost in there was that they also had the ability to buy gold and gold ETFs. And so it wasn't just a case of purely about Bitcoin, but company reserving the right to buy gold ETFs for their own treasury purposes as well. I think that's really interesting because when you look at the balance sheet of a Fortune 500 company, which obviously Tesla is now, then you have a situation where the treasury could act much like a central bank and hold not just cash and alternative cashes, but something like gold as well. I think that's a really interesting development.
Yeah, and the returns already people pointing out working in Tesla's favor since that move was announced, but very interesting there. Well, Rhind, Granite Shares CEO, appreciate you joining us once again.